Okay, it is August 9th, and we finally got the bounce we've all been waiting for. And this one is a pretty good bounce. I expect it to carry through for the rest of the week. So let's go over what happens so you can have some frame of reference if you're investing. Now, we got this breakdown back here. Okay, we were all in cash. If you were following along, we were in cash right here because we were aware of this double top, and we were in cash for most of this decline. I started buying on this big 260 point down day. I held off on buying on the next down day. Let's zoom in a little bit. Okay, we got the breakdown right here. I started buying a lot on this 260 down day. I held off on this day. I started buying a little bit more on this big 600 day yesterday, Monday. And then today, after we got this, I started buying some more. I'll show you on a 5-minute why it was a good buy signal. Okay, if you look at the E-mini futures overnight, you could see that 1150, excuse me, on the S&P 500 was acting as resistance on the E-mini futures, whereas 1080 was the lowest it saw all night. So we got this strong open here, which didn't surpass the previous day's intraday low, but I still wasn't buying here because we were clearly getting resistance back here. From the previous day we saw here, but all throughout here we got the Fed announcement right about here, and this was the washout I was looking for that held 1100. So once we got this, that was your major buy signal. So you should have been buying right here. I was, and then if you weren't buying right there, you could have still bought right here in this flag pattern that I'm showing you. We got a mast right here, and then we've got our little flag right there. We got the breakout of the flag pattern right here. What this signifies is a strong uptrend, little bit of consolidation, and then a breakout of consolidation shows you that demand is overwhelming supply for stocks. So this was your major buy signal right here, and you can see the strength continued into the rest of the day. So that's what we're looking at. Now, if you're looking at it like this, it doesn't make a whole lot of sense, but if we switch to a 4-day chart, all my parameters are still the same. I kept the moving averages the same. I just switched to a 4-day. You can see this 200 period. This isn't the 200 day anymore. It's the 200 period. So 200 4 days. Each one of these candlesticks is 4 days of trading. You can see right here we got rejected at this 200 period moving average. And now what's happening is it's acting as support. So what I expect to happen is that we get continued strength, maybe up until about 1300 on the S&P is where you can start looking to definitely unload a lot of stock. I don't know if we'll get a breakdown to lower levels or not. We'll deal with that when we come to it. But for now, given the oversold, extreme oversold nature of the market, I expect this to continue upwards for at least a week or so. Now that's the S&P 500. So some stocks that we can buy. Switch back to a 1-day now and zoom in just a little bit. This is one that I'm buying, is Salesforce. These lines right here are just kind of support and resistance lines I've been looking at for a while. At 135 it broke through that, but Salesforce, you can see it's kind of generally trading in this approximate range right here. This is something you want to buy. This big update, 6% update, was on above average volume. This little white line is the average volume, so you can see that this volume bar is above that, which is good. Up days we want to see being on higher volume. So Salesforce looks like it's good to buy. What I also like about it is this on balance volume is just kind of holding steady, which means that it's not under distribution. You can see when this on balance volume goes down, that's indicating that the stock is under distribution. You can see when we get distribution, you'll generally get this kind of a downtrend. But when we had this downtrend, we're not seeing any distribution. This on-balance volume is just holding steady, which means that it's not under distribution. So Salesforce is a good one. I like Salesforce. I'm buying it. We got Wynn Resorts. This one is in a nice uptrend. You can go, this uptrend goes all the way back to September or so of last year. But this one, it's a perfect buy. You can buy this right at 140 is a bit much. Maybe, I doubt we'll get a pullback. Today was the optimum time to buy, but if we get a pullback down to here, it's 10 points away. Now 15 really, it's at 140. We get a pullback to maybe 130, 125. If you get that, it would be a more opportune time to buy. But you can see again, this up day on very large volume. It's not under too much distribution. This is pointing down a little bit, but that's to be expected. It just had a 30-point move down. But what I really like about it is the stochastic crossover. Momentum is in its favor. I like Wynn Resorts. I like Apple. You can see Apple, we had this channel right here, a little downtrending channel where it was in some consolidation, and we get the breakout here. Again, we get our little flag pattern, we got the mast, and we get this little consolidation for 3-4 days, and then the breakout. So when we get a breakout, we generally are going to have some kind of retest of the breakout at some point. You get a retest in one of two ways. Either you get a retest of the downtrending channel, which I would expect could happen because the 200-day moving average is right here, and that would coincide with this channel, the top of the channel. So we could get a pullback to the 200. I wouldn't get too freaked out if Apple came down to 340 or so before it really put in some good support and bounced, which could happen because these stochastics haven't crossed over yet, so momentum is still pointing down. Apple could come down to 340, in which case I do think it would be a buy because obviously it looks really strong. But we can also get a breakout, a test of the breakout in another way, which is this flag breakout right there. We can get a test of the horizontal breakout, which is what we're getting here. So you can buy some Apple at 367, and keeping in mind that if it comes back down to 340, don't get too freaked out and keep a tight stop, because then you'll get stopped out right when the smart money's buying down here at the 200-day moving average before Apple goes to 400. Apple's a good one. You can get some Amazon. There we go. Amazon showing some support right above the 200-day moving average, again on very high volume, and we're just about getting our stochastic crossover, and you can see the power of this stochastic crossover, which also back here coincided with a MACD, a moving average convergence divergence crossover. We got this nice big move. So Amazon, I expect this to rally way back up to 230 before maybe I'd sell some of that. So those are some stocks that I'm looking at. Also maybe some Deckers. Okay, Deckers is in this approximate channel right here, some kind of, it's not exact, but again, Deckers, high volume, on-balance volume is pointing up. Deckers, we have nice support. I expect Deckers to go back up and test 100. So overall, it looks like we have ourselves a nice bounce, just so long as we stay above this level, 1100 on the S&P. So there we go. Again, look, stochastic crossover right here, high volume on an up day. I like the market.